Welcome to RSM Tax Summit Week 2021. Today's presentation is how to solve operational transfer pricing puzzle. At this time, I'm pleased to turn our call over to our first presenter, Sean McNamara. Sean?
Hello, everyone. My name is Sean McNamara, and thank you for joining me at RSM's Tax Summit. I'm joined today by my colleague, Andrew, and we'll be talking about how to solve your operational transfer pricing puzzle. Now, at the beginning, you all may have read a teaser that hopefully attracted you to our presentation, but the premise of this presentation is to help bridge traditional transfer pricing with operational transfer pricing, and they certainly are not mutually exclusive. They work together, so we want to show you how they work together, but explicitly focus on the unique solutions that operational transfer pricing can provide. Our learning objective will be to walk through the transfer pricing governance cycle, and we'll be focusing on some commonly missed items and how operational transfer pricing presents a practical solution. So with that, let's get to our agenda. So we'll be going through why is operational transfer pricing relevant now, some of the governing pieces, implementation, and transfer pricing governance cycle. I think we'll do a brief introduction after the learning objective slides. I'm a little bit out of order. So my name, as I mentioned, is Sean McNamara. I'm the transfer pricing leader for Canada, and I focus traditionally on operational transfer pricing. And I'm joined by my colleague, Andrew. Andrew, do you want to give us a brief introduction and then dive into why operational transfer pricing is relevant now?
Sure. Thank you, Sean. Hello, everyone. My name is Anju Singh. I'm the National Leader for Operational Transfer Pricing at RSM. I have over 20 years of experience working at professional services firms. I support my clients in the areas of tax, technology, and transfer pricing consulting. My expertise is on the operational side, so it's in data, process, and technology as it relates to transfer pricing. So before we get into the specifics of operational transfer pricing, let's try to understand what's going on in the transfer pricing landscape overall and why operational transfer pricing is so relevant today. Well, if we look at the transfer pricing journey, transfer pricing has always been a complex topic, right? The complexity has significantly increased in the last 15 to 20 years with a significant increase in cross-border trade as well as in intercompany services. According to a market survey done recently, intercompany transactions accounted for around 70% of global trade. Just think about it. 70% of the data that sits in our ERP systems are intercompany transactions. So you can very well imagine back in the old days, what was possible using some basic spreadsheets is impossible to even imagine with the volumes of data that we are dealing with today. Transfer pricing has always been a high impact area. I wouldn't be wrong if I say that it's amongst the top 3 pain points companies face during their financial close cycle. It makes an impact on the global ETR. We all know transfer pricing is what determines how much profits are left behind in each of the jurisdictions, right? And any changes or adjustments makes an impact on the global ETR. Then there are some internal drivers as well, like there's disconnect among functions within the organizations because there are so many stakeholders involved in this whole process. And transfer pricing is largely done using spreadsheets, which brings with it its own set of risks and challenges. So fast forward to now, what's going on now? When I say now, it's in the last 3 to 5 years, the tax authorities have ramped up their scrutiny of transfer pricing. They're becoming more and more savvy on the usage of technology tools, and so they're able to better analyze the situation and ask more specific questions. OECD, in the meantime, has also come up with its own guidance in the form of BEPS 1.0, which came around 2015-16 timeframe, and now with BEPS 2.0, the same themes continue. And there's more and more focus on transparency. And in the last year and a half, what we have noted with COVID, it has caused a big disruption and a huge impact on TP. In all this, technology has improved in a major way as well. And some of the options that we didn't have available for us TP are now being explored. So what do we expect for future? Well, we think the same themes are going to continue. We think that the transparency mandate will be there. We think there will be increased focus on digital transformation, and technology will continue to evolve. All these trends are leading up to a new focus on operations and a new focus on automation. And this is why operational transfer pricing is gaining significance. I would like to describe operational transfer pricing as a combination of traditional transfer pricing technical capabilities layered in with data process and technology skill sets, which allows us to have a more interesting, more compelling option for us to have a more comprehensive solution for TP from planning all the way to implementation. So with that in mind, let's get on to our discussion. Sean, could you walk us through the transfer pricing governance cycle and explain to us what are some of the high-level steps involved?
Thank you, Andrew, and I'd be happy to do that. So traditionally, transfer pricing has three prongs. In this, we have a little bit of pyramid, but they're almost circular as well. When you have a new transaction, you often start with planning, then you work your way through implementation, then you get to your compliance, and then things change over time, and we're back to the planning circle. Traditional transfer pricing has historically dealt with two of these very well. It's very good at planning, figuring out what we should do, how we should price things, and it's very good at ongoing compliance, describing what's been done, deferred from tax authorities, things of that nature. What has not been as well addressed is implementation. And implementation is interesting. So Andrew brought up a fact that was really interesting to me that I did not know before this presentation, that 70% of trade is intercompany, which means that a lot of data collected internally is intercompany data. And I know from experience, where intercompany data is not handled well, it not only creates headaches in transfer pricing, but it creates headaches outside of that for your ongoing tax governance and in other areas of tax. And that's what we're going to focus on today. We're going to focus on the implementation step, which is where operational transfer pricing provides some great solutions. Andrew, one of the questions I have for you, looking at from operational transfer pricing side, is this what you see? Do you see traditional transfer pricing helping with planning compliance really well, but implementation is really where operational transfer pricing has a chance to shine?
Well, why don't we move on to the next slide, and that will be able to give you a better picture of what's going on, talking through some of the governance pieces. Sean, you gave a very nice high-level overview, the big picture, but as we start to, peel the onion and start to see the inside pieces, or there are so many layers and layers of complexity is what we notice. And we notice that all of these pieces are mutually interrelated, interlinked. You cannot solve for one without fully understanding and appropriately coordinating with the other. So again, going back to our puzzle analogy, it is very appropriate that, when we start to see all these pieces that you're seeing on your screen, just like the pieces of the puzzle, each of these has its own significance. If we miss any one of them, we won't be able to see the full puzzle, right? So with that visual in mind, let's look through these pieces, and we'll be able to better explain to you what are some of the key considerations in the overall TP life cycle, all right? So when we are in the planning phase, like you were talking about, Sean, what's important? It's important that we have a comprehensive view of what's going on in the rest of the organization, right? So questions like, are there any business changes? Is the operating model the same, or has it changed? Are there any new acquisitions coming through? If so, do we have any new products or services in the fold? All of these need to be considered before we set a plan in motion, right? Similarly, when we get on to the implementation phase, it's important that we think about how we're going to operationalize this policy. What will be the methodology we will employ? Where are we going to get the data from? how many systems are involved for that matter? And will there be any opportunities that we can utilize for automation? Also important is true-ups and adjustments. Are we anticipating any adjustments? And if so, have we assessed the impact on customs and VAT? These are all very critical pieces of information that needs to be fully defined before we set out to solve our transfer pricing puzzle. Then we move on to our compliance phase. And the question here would be, well, are we going to get the financials easily available? Will that be at the level of detail that we need for a master file, local file documentation? Or in the event of an audit, are we prepared for it? Do we have all the information that we will be needing? So it's very important that we have a clear vision, a blueprint of sorts. Again, going back to the puzzle analogy, the clearer we are about the full picture, the easier it is to fit in the pieces and work towards that final goal, right? So with that, Sean, if you wanted to add anything else here. Sean?
Apologies, I was on mute. I don't think I have very much to add here. I think what the last two slides has done very well is helping demonstrate how this can be viewed from a very simple perspective. You can just see planning, implementation, compliance. But there's a lot of moving pieces to it. A number of years ago, we used to always hear that from non-transfer pricing practitioners that cost plus 5% was always the right answer. And we certainly know today that that's not the case. And where I think we see more challenges now is we see people have good planning, good compliance, but they're often overlooking their strategy for implementation. And implementation is what Andrew specializes in a little bit. So let's look at a high level, 3 steps to what's an implementation, which will be the focus of our presentation. And then we'll go through these each in detail and dive into what they each mean. So Andrew, can you give us a high level overview of the 3 steps of implementation we'll be covering today?
Sure, I'll be very happy to do that. So implementation, like you were saying, is the area that we often overlook, right? Because it's very complex and it's difficult to wrap our heads around. So what we have tried to do is we have tried to break it into smaller chunks and so we can understand it better, right? So implementation can be further divided into these 3 parts: pricing and costing, record to report, and monitor and analyze. Let me try to explain each of these phases in simpler terms, and then we will go into much more detail and talk about some of the practical approaches and what all experiences we've had in each of these phases. So first step is pricing and costing. This is the step where business model and transfer pricing policy come together and gets translated into a methodology, or we may call it a set of rules that systems can understand and follow. This largely depends on the type of intercompany transactions, right? So if the company is engaged in cross-border trade of tangible goods, for example, chances are the policy is set on targeted returns. So in order for us to operationalize this, we will need to determine the import prices, the export prices of the goods at product levels or SKU levels. And that's a challenging task. If, on the other hand, the company has centralized services and is dealing with the cost recharges or allocation of management fees, etc., in that case, the focus will be on getting the cost right. Because like you were saying, the policy most likely would be on cost plus. In that case, the entire focus will be on getting the accurately identifying your costs and allocating the cost across jurisdictions. In the record to report phase, this is where we deal with the systems. We essentially take the price and cost calculations that we just did and apply those into the accounting system. So the system can record transactions correctly. How well the data is recorded or configured decides the quality of reports you will be able to generate during your month-end or quarter-end or year-end cycle. So this is the record to report process. And then we move on to the monitor and analyze phase. This is where the central focus is on comparing budgeted financials to actual results to make sure that transfer prices resulted in the desired arm's length outcome. And the key considerations here would be how are you doing it, whether you're doing it manually or in an automated fashion, and how often you are doing it, whether it's quarterly or just once a year. And the answer to these questions will largely determine what kind of challenges the company will face downstream. I recognize this is a lot of information to take in, and as I was saying, Sean and I will go into more detail on each of these phases and discuss the pain points associated with them and, discuss some of our experiences and the approaches we've taken in the past. Sean, would you like to move on to the next slide?
Yeah, let's dive into some of those details and try to make this as approachable as we can. So the first part about implementation is pricing and costing, which Andrew gave a brief overview of, and I'll try to summarize as I understand it from a traditional perspective. But it's the work that's involved in developing how we're going to price some type of intercompany transaction, be it tangible goods, be it intangible, so like a licensing fee or services or anything else. Maybe it's intercompany debt. But Andrew, I have a question for you here. So when I approach pricing and costing, we often focus on, let's figure out the approach to calculating supportness, making it something that's defensible. I'm curious what challenges you see from an operational transfer pricing perspective when you get to pricing and costing.
Sure. There are data and systems challenges, yes, that will be more prominent as we move along in the cycle. But at this stage, the biggest challenge that I notice is that we are dealing with many moving parts and multiple teams that typically work in silos. So at this phase is where we are trying to have a methodology in place, right? So in order for us to have that sorted, we need many pieces to come together. We need the policy, we need the budgets and forecasts, we need the actual data from the systems, and all of these systems, as you would imagine, are coming from different sources, different teams. For example, transfer pricing policy is developed by the transfer pricing team, right? Budgets are prepared by most likely an operations team or FP&A team. And data is coming from systems that's eventually coming or prepared by the IT team. So the point I'm trying to make here is that each of these teams may not have a full view of what transfer pricing is, and they may not have, they may only have a very piecemeal understanding of the policy, how to interpret the data, or how to apply the rules. So what's required at this stage that I often see missing is stronger collaboration, having some sort of a governance framework that has a set of clearly defined protocols and clearly defined roles and responsibilities across the function. Any disconnect, could give rise to a lot of complexities in the downstream process. I will like to go back to the puzzle example where you can see this as multiple teams working on different components of the puzzle. As long as they all come together and fit in their right positions, we can have a completed puzzle. But if that doesn't happen, what we are left with are lots of little itty-bitty pieces that don't make any sense, right? Does that answer your question, Sean?
Yeah, that's a good answer. I like how you focused on two things there. One was collaboration, and it's one of RSM's guiding principles, but the other is all the teams impacted in an organization by how a company chooses to deal with their transfer pricing. I think all too often it's left to folks in the finance or FP&A groups, but it certainly has implications beyond that. And solutions are look at the broader company structure and making sure that each team has the information along the way is certainly going to yield a more effective outcome. That does get me to the next and, in my mind, obvious question. So as you speak about interconnectivity, that brings the complexity up and up. But we certainly know that some transfer pricing calculations are done by hand. So in your experience, is there still room for people to do these calculations by hand? And when I say by hand, commonly we mean Excel schedules, but something similar to that?
Yes, I do see that a lot, Sean. Excel continues to be the tool of choice, and it makes sense also because there are so many sets of information, and not everything is originating from the system. So companies end up doing all their calculations using Excel. But with the volumes of data involved and the complexity of the process, it's important that we take somewhat of a structured, streamlined approach and not do this in an ad hoc manner where you have hundreds of tabs and the data pulled as and when needed and pretty much no controls in place. An Excel model can work very well as an interim solution if we just take a step back and put some thought in the design of the model and maybe apply a few software design principles. For example, you can structure your model as an input, process, output phases. So you have a clear delineation of what the source is, what the formulas and calculations are, and what the outcomes are. You can even add basic controls and checkpoints in between these phases so you have a full visibility and some sort of an audit trail for the data that you're using. You can also add some validations up front to ensure that you're working with complete and accurate data set. So with all of these very simple steps, you can take your rather ad hoc approach and make it a more well-designed, streamlined, and a thought-through approach and mitigate some of the spreadsheet risks.
Thank you. I like that answer, and it's certainly something that I see in my day-to-day practice as well. Sometimes we see Excel schedules that are 1-2 pages, and those can work okay. But to your point, there's probably a few best practices that we can learn from you and from operational transfer pricing, how to make those better. But there are the other times that you alluded to when we see, I think you mentioned 100 tabs, but once you start to get above 10 tabs, you really start to consider if there's a better system out there that can actually help you record and track your transactions, which gets us to the next part of implementation, which is record to report. So record to report was actually a new term for me, but it's very powerful in transfer pricing. And it looks at something that anyone with an accounting background would understand. It looks at how we convert actual transfer pricing policies into the recording for systems purposes. So it gets into your books and records, your general ledger, things like that. And it does help you generate accurate and delineated reports. But I suspect there's a little bit more to it than that. So Andrew, I'm focusing on books and records as I'm a CPA, so by background, that's what I'm comfortable with. But I'm betting there's a little bit more. So tell me what I'm missing and tell me some things you've seen in the mid-market space that RSM operates in.
Sure. Yeah, you're absolutely right. The focus has been traditionally on getting the books and records right. But like you said, it goes deeper than record keeping, right? This is the phase, as I was saying before, where we deal with systems and data. And the first question that comes to mind is, how many systems are there? Is it 1? Is it 5? Is it 10? And this is especially true for companies in the mid-market space, as you asked, where the growth strategy has traditionally been focused around mergers and acquisitions. So when companies come together, as we all know, there's always a crunch of time and resources, right? So what typically happens is that systems are only merged at the highest level, leaving the underlying data still in the legacy systems. So this becomes a major pain point for us because now we are essentially operating with so many systems. So when you need the data for transfer pricing purposes, for example, now you have to go to get all of these systems to come together Often they won't have data in the similar format or level of detail that we will be looking for. Data availability, I must say, continues to be a constant struggle for the tax department in general, not just transfer pricing. According to one of the surveys, tax department spends 45% of their time in just getting the data ready. That is copying and formatting data before they can even use it for their analysis or calculation. Now that's a lot of time, lot of non-value adding activity, right? This is where operational transfer pricing can come in handy, because with using operational transfer pricing, we can harmonize the data and make it readily available for calculation.
That's a perfect example, and I was chuckling to myself as I was listening to you, as the situation about multiple ERPs, that arises quite commonly, especially when we're dealing with companies that are in growth stages, and getting those systems to talk to one another or just accessing the information. There's been times where I've seen reports skipped and be just booked for tax purposes, and then getting your hands on the backup, supporting it upon audit becomes quite confusing. So I'm really glad that you chose to focus on that today. So as we talked about more complexity, and I'll tie together two ideas here. So in the prior slides on pricing and costs, and we talked about some companies that choose to keep transfer pricing relatively manual, and they start to have this Excel. And maybe it started off as a small thing, but it's grown to 50, 60 tabs, and there's probably not perfect controls around it. And maybe they've been a high growth entity, so there's a couple ERPs they're looking at, and that starts to have me think about automation, as that's a task. So when you're calculating your transfer pricing charges, you tend to do it, be it monthly, quarterly, but repetitively. So that makes me think about automation. So Andrew, I have a question for you here on automation, as that's a hot topic. Do you see that as the perfect answer for all mid-market companies with intercompany transactions? Or do you see companies still there, doing calculations in Excel, recording journal entries, and that's still part of the solution today?
Well, great question. Before I answer this question, let's be very clear about the term automation. There are many forms of automation, as we see. There is full automation. What I mean is that we automate the policy directly in the ERP system. So data as well as policy all resides in one place. Of course, this is the gold standard, the best of the best approach, right? Then there are other options. Let's call it partial automation, or maybe parallel processing, as it's commonly called. In this scenario, the data still sits in the ERP systems, but we automate the process outside of the system. So we pull the data out of the systems and use any type of desktop solutions like Alteryx or Power BI to automate the calculations and then link it back to the systems in the form of journal entry. And then there's another option, which is what I talked about earlier, which you alluded to, which is a notch down, I would call it, from the above two solutions, which is entirely based on Excel models, right? The concept is the same. You pull data from the system, use a streamlined Excel model to run the calculations, and then link it back to the system. But like they say, there is no perfect solution, and there's no right or wrong approach. Any of these options can work well if we are aware of the facts, know the pros and cons of our choices. So for example, in the full automation example that I gave, what are the considerations? Well, as you would expect, it's harder to implement because it has the complexities of the systems, right? And you probably will need the support of your IT teams, which is usually a hard, task to get through. It's also more costly, given the complexities. But then when we start thinking about, the long run, it's easier to maintain and scale. Because all of the data and policy is all in one place, and we are also able to employ some of the system controls, etc. In the case of partial automation, it may be somewhat easier to implement upfront, but it can get more tricky, as you would imagine, to maintain and scale in the long run. because, as I was saying, data and process are in two separate platforms. And so they will need to be kept in sync at all times. And you'll also need to be aware of the timing considerations. When did you pull the data? All that good stuff. So once again, any of these options can work and work well as long as we are mindful of our choices and we can clearly weigh in the pros and cons of our choice. Did that help answer your question?
Yeah, that answer really aligns with my experience as well, as there tends to be no perfect tax answer, no perfect transfer pricing answer. That means that there's really no perfect record to report, be it full automation, be it parallel part processing, or keeping with your Excel and doing it by hand. You'd have to look at the complexity, how many transactions we're dealing with, and just the resources that we can dump into this. That's obviously part of the equation. Okay, I do have a hard question for you here, and
sure.
I'll focus on the more automation side of it, as I think that's a pretty interesting topic and we hear that a lot. So where you have had a situation where automation is the right answer to go, so we're probably looking at more than one or two transactions, probably multiple entities involved. How much time have you seen this save? And to put it in context, I've certainly worked on some companies where the org chart is big enough that doing it by hand isn't an hour calculation. It's not a day calculation. It can take a couple of weeks to get it through. So I'm curious what you've seen and how much time these types of solutions have actually helped save.
Oh, certainly. As I've been saying, there's a lot of repetitive tasks, and the whole process is quite inefficient if not done correctly, and also risky because it's all performed manually and especially in crunch times when you don't have the luxury of time to double check your work. So automation is definitely key here. To answer your question, I'll take the example of this company that we assisted recently. They were having very inefficient financial close process, and a big part of it was caused because of the complexities of their intercompany transactions. So it was taking them more than 5 days to do their financial close process. With the help of automation, we not only were able to reduce the manual effort and free up some of the key resources for other activities, we also helped strengthen their controls and compliance. We introduced an audit trail, and which provided them the full visibility into the intercompany process. From a time savings perspective, we were able to bring down the cycle time by approximately 3 days. So we shaved off 3 full days from the close cycle, and that was huge. But I would like to also mention that efficiency and time savings are definitely important considerations that we should be thinking of when thinking of automation or using an operational transfer pricing solution. But it's also important to keep in mind that we also think about the other benefits that it gets us to, like risk mitigation, being in control of our process, or even cost savings.
Great. I like that as well, especially how you ended it on risk mitigation. The other aspect I like about it is the example you gave about financial close. It's a stressful time, and financial closes happen more than once per year, commonly monthly. So that time would really add up over the year, and that's a tough time for us accountants. So anything that saves time there is always appealing to me. So the last thing I ended on was risk mitigation. And I think one of the questions we have is, if we work through pricing and costing and we get that right, and then someone says to us, Andrew, well, we worked through record and reporting and we got that right, what's this doing for us? And that gets us over to monitoring and analyzing, which is kind of like the carrot or the treat at the end. And it's really your chance to mitigate a lot of risk. So if you get the first 2 steps right, you really have a lot of good data at your fingertips to help you manage from a transfer pricing perspective. If you have policies that have periodic true-ups to hit target margins or whatever, you can get accurate data, I'll say up to the minute, but monthly, whatever it is. You can monitor your results frequently, sometimes real time if you've gone to that level. You can get the results from various companies factoring in intercompany transactions. And then it goes beyond transfer pricing. One thing that I think is interesting is transfer pricing. We tend to look at things from a macro, so we look at a company as a whole, sometimes what the results as a whole are for one group, one division, whatever it is. But customs audits often look at it the other way. They look at it from a micro, so transaction by transaction, sale by sale. And having good pricing costing, good record to report can really help support those endeavors as well. So Andrew, I'm going to ask you a question here. What are some of the best practices you've seen around monitoring?
Sure. That was a loaded question, but I will focus primarily on the monitoring aspect right now. From a best practices perspective, well, I would say there's no silver bullet or a one-size-fits-all approach. Every company's fact patterns are unique, right? So it's important that we take proper consideration and ensure that any approach that is picked is the right fit for the company's business and the industry it operates in. With that said, many companies find regular monitoring difficult, and again, alluding to all the things that you've been talking about, the complexity of producing operation transfer pricing reports, working with huge volumes of data, and most importantly, not having the right process or tools in place. So they end up just doing these monitoring only once a year. And this leads up to larger post-year adjustments and true-ups, and eventually catches the attention of the authorities. A more prudent approach would be to have a target model with touch points on an ongoing basis, like doing a light review at the end of the first quarter, and then at the halfway mark, implementing a more regular monthly steering process to assess how things are shaping up. With this type of a model in place, by the year end, you would have a pretty good picture of how your transfer pricing positions turned out, and will have minimal changes in the post-year end period as well. Having some sort of automation, even if it's simple Excel model, will certainly lead to more frequent monitoring. And it will be very critical, especially in the post-pandemic world, where we may need to have more than just documentation to justify our TP policy and their impacts. Did you want me to go into the customs query, or did you have anything else in mind from a customs perspective, Sean?
I do have one more question for you. One thing that I like that you focused on there was how commonly companies are looking at transfer pricing, and you're very right that sometimes we only see it done once per year. Sometimes, if we're lucky, it's done quarterly, but it's probably not done as frequently as it should. And I do believe, to your point, a lot of that is due to access to information, how easy it is. Is it one click away, or is it 1,000 clicks away? And that's going to either increase the frequency of monitoring or decrease it. And by increasing the frequency of monitoring, there's going to be opportunities as well, or at least risk mitigation opportunities. So one more question on monitoring and analyzing for you, Andrew. And you're right, it's going to be linked to customs. And the query that I have is, when we see our customs colleagues dealing with audits, and sometimes when we're dealing with transfer pricing audits as well, we have to access detailed information. So we can't go on the traditional macro level. We need granularity of data. Sometimes it's by product. So sometimes we have to build cost up, similar to that. So does operational transfer pricing get us there, get us the granularity of data that we are seeing more and more tax authorities ask for?
Exactly. You hit the nail on its head, Sean. Most companies manage their transfer pricing, customs, and their indirect taxes totally independently. There's typically very little overlap in their day-to-day process, even though as you were saying, these functions have so much in common. Just from a mere information collection standpoint, the data each function gathers is virtually the same. It's just put to use differently. So this is where a siloed view is sort of detrimental, because you're doing redundant work, and there's lack of it will lead to lack of standardization, and you probably would have to maintain many systems. And once again, as you were mentioning, transfer pricing is essentially viewed with income tax purpose in mind. So we are always focused on ensuring that entity level profits are in line with the stated policy. So it's calculated at the macro level or aggregate or entity levels, while custom duties have to be assessed at the micro level or a much lower level. And so the impact of any transfer pricing adjustments has to be assessed at the product or SKU level. And this is what the major reason why there's lack of coordination or a gap between these two areas, because we are functioning at two separate levels, right? And operational transfer pricing definitely can come in handy because we can deal with data at a more detailed level and able to do calculations such that the same information can be used for customs as well as TP. Another disconnect that I often see is from a customs perspective that companies typically know that there is an obligation to report upward adjustments, otherwise face monetary penalties, etc. But they tend to overlook the opportunity of a refund of duties when there's a downward adjustment. And the big reason for this is that transfer pricing adjustments are not being made timely. It's often very late in the process, and so there is very little time to realize any savings potential. So in summary, it's important that adjustments are made timely, they are made at the right levels, and their impact is assessed both from TP and customs perspective. And once again, technology or operational transfer pricing is the only way forward because that can be a huge driver to bridge the gaps between these two areas.
Thank you for that. And I like that you spent a moment to remind or to bring up that downward adjustments often can mean that there is opportunities for customs recovery. It's certainly an area that we both at RSM have operated in. And you're right, if it's not done timely, there's a big chance you'll miss that, which can be cash back in your pocket. And if it does go the other way, generally still a requirement to report that, and you want to mitigate those risks. So with that, I think we've reached the end chat on the implementation, but as a traditional practitioner, I did not want to miss the opportunity to speak briefly about compliance. And I think operational transfer pricing is pretty exciting in the compliance world. One thing that I think it can really resolve is accessing data. So sometimes when we're preparing documentation, you need certain data. Maybe you need data on how things are calculated, which line items it came from, things like that to be able to demonstrate that what you're documenting in written word actually exists as data as well. It's also going to allow us the opportunity to monitor true-ups and outcomes, which we chatted about. And probably the area that appeals to me the most, just because I like this area, is dispute resolution. So when you're dealing with one of the tax authorities, one of the more common problems we come across is accessing information. By the time they've selected a taxpayer for audit, the government's already had information reported to them, so they expect the information is going to be readily available. And that's not always the case if the record to report hasn't been done well. And I think that's an area that operational transfer pricing can really help address and help mitigate our risk upon audit, more so than just maintaining your regular transfer pricing compliance documentation. Last question I have for you, Anju. Is there any other areas beyond compliance that you'd like to highlight today?
Sure. That was a good summary on the compliance and how operational transfer pricing can come in handy there as well. But one other quick point I would like to add is that operational transfer pricing can be used to integrate transfer pricing with other tax compliance processes as well. Having a broader approach in which we are thinking about all the needs of tax in one go, rather than having an ad hoc or a siloed approach. Like when we are filling our international tax forms related to intercompany transactions, the information that we gather gathered already for transfer pricing purposes can come in handy. Perfect examples would be International Tax Form 5471 or International Tax Form 5472 or 8975, which is the CBCR form. In doing this or having this approach, we are bringing in further efficiencies because we are tapping into the source just once and utilizing it for all of our tax needs. So that's definitely a value that operational transfer pricing can add and bring to the table.
So good area to highlight on, as you brought up 5471 and 72, and if anyone is attending from outside of the U.S., they probably have comparable forms. The Canadian form is the T106, but by the way, it's some form that reports what the intercompany transactions were. And, you know, it's important to get the stuff there right, and it's important to get it right country to country. So sometimes we look at T106s from Canada and your 5471s or 72s from the U.S. And there's a general expectation that those things can align. But because companies may have different ERPs, sometimes they have different fiscal year ends, whatever it is, it can lead to mismatches that you would not expect. And I think that operational transfer pricing can present a method to help manage that risk, help it going forward, and just put us in a situation where, to the extent we do start to face those audits, you know, the T's are crossed, the I's are dotted, and we just have fewer soft spots for tax authorities to pick on. So our next slide is the conclusion. And in concluding, I'll start off quickly, and there's a reason I'm starting, and it's because I'm not the operational transfer pricing person. It's because I had an opportunity, like our guest today had an opportunity, to sit down with Anju, albeit virtually, and learn from her experience in really helping solidify what implementation looks like, how it impacts pricing, costing, record, report, and then the care at the end, the monitor and analyzing, and the opportunities we have there, of which the smallest is certainly not the time savings, which very much appeals to me. So I spent some time at the end of this, once we've worked through this presentation, trying to come up with what my understanding of operational transfer pricing is. And this is the quote that I came up with, and it's not stolen from someplace else. It was from my own mind, and it was simply put, operational transfer pricing, OTP, converts your transfer pricing policies to recordable transactions, bringing administrative ease and defensibility to your transfer pricing and beyond. And I'm not trying to be facetious with the and beyond part. What I'm trying to say is, the more I work through this, the more I understand about operational transfer pricing, the more I see all the areas it impacts. I know that FP&A departments have to work beyond just themselves, and I really like that Anju focused on collaboration between teams. We also should know that transfer pricing impacts more than just transfer pricing, certainly more than direct taxes. It gets into the world of customs, it gets into the world of VAT and many other things. And it's really neat to see that solutions are starting to be a bit more wholesome, a bit more holistic, and consider how all those pieces fit together. So I really do see it as a path forward and a very, very powerful tool belt in the belt of or in the toolkit of your traditional transfer pricing practitioners. So with that, we're going to conclude our presentation today. I'd like to thank everyone for attending, giving Andrew and I a few minutes to chat with you, and we hope you each have a wonderful day and wonderful rest of your Tax Summit 2021 with RSM. Thank you.